Hello and welcome to another update video about Polygon MATIC. Yeah, it's time for Polygon to turn around here at some point. Otherwise, it will morph into the alternative or second scenario that we talked about yesterday. But first of all, we are still here in the support area and we need to be watching here for any types of trend reversal in this area. This is an incredibly difficult chart. It's a very difficult chart to read, and it leaves options open, unfortunately. But we talked about support areas. It yesterday, or actually today, hit one of these supports. So it's the next possibility and potential for it to turn around. My view is that we could get one more low here in line with Bitcoin, because that's at the moment what I expect for Bitcoin, Ethereum as well. That we are doing some kind of a fourth wave on the weekend. We can take a look at the subwave structure here as well. But actually it has enough waves to consider this move down complete. So we're going to talk about that. Just to remind you of the different scenarios here, I did explain them in yesterday's video as well. My view is that we moved up here in a wave one. That's pretty much a given for me. That we then moved down in an A wave, a rally in a B wave, and we're now coming down in C is the first possibility. That's actually the possibility you see here on the chart laid out. The problem in this chart, or in this potential, is that in such a count, the C wave can be very long. Yeah, because with an overshooting B wave, you can get a running flat where the C wave would end above the A wave or below the A wave. That would be an expanded flat. I'm currently not speculating for an expanded flat, but I see that as a possibility if Bitcoin breaks its 17.5K support level. Of course, it's possible, yeah. But what we can do is to identify areas of support and possible trend reversal areas and talk about the most probable outcomes. So don't forget about this other possibility, because this is a possibility. I have highlighted these support areas in orange. Orange means higher risk and they can break. However, I did inform you yesterday about the view that a bounce either way of some sort is quite likely in this area, because even if we come down in this expanded flat pattern, I would be surprised if it happens just in one straight line, in one go, without any corrective movement to the upside. Because let's say we come down lower, then it would still be possible here to do the wave one, a rally in a wave two, making a lower high, coming down like this, yeah. This is for me, however, the less likely outcome that we get this expanded flat. Possible though, yeah. We need to focus on it, and because it is still similar probability, those support areas are in orange. But from a spot market point of view, anybody who missed maybe earlier entries, yeah, I mean that for me personally, that's sort of the setup for that, for spot entries, for maybe the next bull run, yeah, or for the next rally. Lower risk entries, yeah, with maybe a small position size, or just spot market, yeah, not necessarily short-term trading positions. Of course, they can be entered as well, but it's just be aware of the possibility here that these orange boxes can break because of the other count where the C wave could go easily below the A wave. That would, however, be quite a bit of a move down without getting any significant retracement, yeah. Okay, the first count you're aware of, and the other count would indicate that we had here a wave one, down here a wave two, that was back in September, where we bottomed at 70 cents. Then here another wave one, yeah, where we peaked in November. And then the A wave down, B wave up, C wave down is possible as well. So we have a 1-2, 1-2 setup. In both counts, we have an overshooting B wave. Both are possible. With the second count here, I've got a problem that this here doesn't really look like a wave one. This move that occurred back in November, but okay, it's possible. You know, it's possible. It's a strange chart anyway. We talked about that. Now, what is interesting for those two counts, I have highlighted here the support areas on the chart because they have a quite significant overlap. So it has reacted here apparently to the 78.6 retrace, no, the 61.8 retrace of the I would need to check which count that was, of the second count. Yeah, so maybe that is the one that is more respected by the chart at the moment. We see a bit of a bounce, but it's not enough yet to confirm a reversal. But these are the areas where we need to be watching for reversal. Certainly received a nice bounce from here. Bullish candle, yeah. On the daily, this will be interesting. Looks a bit like a reversal candle, but the daily candle isn't closed yet. And let's see what the weekend brings, yeah. On the 1 hour chart, if we take another look, can we actually label this move down? It is tough to label. I can tell you that straight away. It's tough to label, but if I count it as an impulse, which would be a C wave, then I would say we had here probably a wave 1, a wave 2. Then this would be a 1, 2. This here might be a series of 1, 2s, or actually the way this looks to me, and we've got that issue currently across the market, that we have here an ending diagonal in the C wave. Then this wave 1 would also make sense with all these overlaps up there. Could then have an A, B, C structure, A, B, C in 2. Then I would have an A, B, and then 1, 2, A, B. Possibly here then the third wave as an ending, so the third wave as an A, B, C, and the C wave as an ending diagonal. Then here possibly a fourth, and the fifth has at the moment also possibly enough waves to complete this move, but it's choppy. Yeah, wouldn't be surprised to get here one more low out of it as well with Bitcoin, and also because it still has more space to come down in an extreme case in this scenario to 82 cents. Yeah, it's a tough market at the moment, but we are now really, we need to be bottom watching here. This is a strong correction that came down. One of the most significant corrections here since June, really. Let's just double check how far we look. We came down around about 40%. And when FTX collapsed, we corrected down in a similar way. So it's a similar level of retracement. We see here on the 4-hour chart a bullish crossover on the MACD, indicating maybe that the bullish, let's call it the bullishness, is coming back, at least temporarily. On the daily chart, you can see that we've now come back to levels that were triggered on the daily RSI when we had those rallies here recently. So there was a rally back in September, which rallied from 65 cents all the way to 130. Then here in January, we had the rally from 78 cents all the way to 150. And we are now correcting down again. And we are at a similar level from the, if you look really on the daily chart here, these levels now, I mean, it can still drop a bit lower, but these levels on the daily RSI have usually led to significant rallies. Yeah. Even here, that was back in June, but that was obviously quite substantial, that low here. But after that, it was this kind of range, which is highly interesting. So be aware of that. On the daily, you can also see similar MACD level as well. And we see a slight reduction of negative momentum, but it's not really strong enough for me to talk about here upcoming, let's say reversal, but they are things that we need to be watching out for. And here the last time, for example, we had a bullish crossover before it really started to move up. So we're not there yet, but they are only indicators. The price is eventually making the indicators, not the other way around. But be aware of those key support levels. And yeah, ideally we're holding 82 cents to really get that third wave with a fairly high probability. Okay, that's my update about MATIC. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.